You got a job and you receive an offer letter that says your salary is rupees 10 lakh. You got excited. But when your salary gets credited, you see that you only receive rupees 8 lakh. You feel like there's scam going on. But my friend, it's not that case. It is mainly because of your cost to company is not equal to your in-hand salary. But the question is, what is cost to company and in-hand salary? So let me break it down. CTC is the total compensation package that has been offered to an employee, and it includes all the expenses that would be incurred by an employer during that year. Mainly, CTC is a combination of three things, that is your monetary benefits, non-monetary benefits and your savings part. Your direct benefits are received in a monetary terms that include all these expenditure. Your indirect benefits are not directly credited to your bank account, but somewhere you enjoy the benefit of it. It's a non-monetary benefit. And the third part is your savings contribution. Under this, an employer and an employee contributes a small amount towards your savings. That is that amount that you can use in a future. So now let's come and talk about all these components. The first one is direct benefits. Under direct benefits, you will find like various components, and in all these components, there are few components that are fully taxable, few are partially taxable, and few are tax free. When I talk about fully taxable, it includes your basic salary, year-end allowance, special allowance and any other allowance. Your partially taxable include house rent allowance, leave travel allowance, car maintenance and phone and internet bills. Lastly, we have a tax-free component, and under this there is one important component, that is standard deduction of rupees 50,000 that is available to each and every individual irrespective of their earnings. Then there are other factors also, meal coupons, newspaper allowance, children allowance, uniform allowance, depending on some certain conditions. Now I'm going to explain you a few components. The first one is basic salary. It is a base amount without including your allowances, deductions or any other bonuses. Mostly basic salary is the largest part of your salary, and it is the base salary for calculating all your year-end allowance, HRA and any other allowances. And there are other allowances like medical allowance, conveyance allowance, special allowance that are available to an individual, and make sure all these components are fully taxable. Now coming to the house rent allowance, that is partially taxable. It is provided to those employees who live in a rented house. And if you have a self-owned property, then you are not eligible to claim the HRA deduction. The amount of deduction is calculated on the basis of the least of the following. The first one is your actual HRA received. Second one is 50% of salary for the people who lived in metro cities, and 40% of salary for the people who live in non-metro cities. And the third is your actual rent paid minus 10% of your salary. To understand this, let's take an example. Actual HRA received by you is rupees 8,000 per month, equivalent to rupees 90,000 per year. The second condition is 50% of your salary for metros and 40% under non-metro. So let's assume we are living in a metro city. So 50% of your 6 lakh, I'm assuming that 6 lakh is our salary. 50% of 6 lakh is rupees 3 lakh. And the third condition is your actual rent paid. So let's say you pay a rent of rupees 15,000 per month, and that is equivalent to rupees 1,80,000 per year, and 10% of your salary is 60,000. So 1,80,000 minus 60,000 would be your 1,20,000. So when you see all of them, the least is the first one, that is your 96,000. So the deduction that you can claim under HRA is equivalent to rupees 96,000. Now let's talk about the leave travel allowance. Under this, employer says to an employee, go on a leave with your family, travel within the country and come back to us, submit your bills and claim the deduction. Yes, you can save tax while traveling within the country. But there are some conditions. You get a deduction only on the travel cost. Secondly, you can avail an exemption for the 2 journeys availed within the block period of 4 calendar years. Currently, the block period that is going on is 2018 to 2021. So let's say in 2018, I didn't travel. Maybe in 2019 also, I didn't travel to any places. So my 2 journeys will be carried forward in 2020. So even if I go for a trip in 2020 for 2 times, I can claim this exemption. Also, there are several conditions while claiming LTA. that is mentioned in the description. Please go through it. Now coming to the meal coupons, if you get the meal coupons, then you can claim the exemption of rupees 50 per meal. So let's say if you go up for a 2 meal in a day, you get 100 rupees. So let's assume our working days are equivalent to 22 days, and 22 into 2 meals per day is equivalent to 2200 per month. So finally in a financial year you can claim an exemption of rupees 26,400. Now coming to the car maintenance allowance. Under this, if you use your car or an employer's car for official purpose, then you can claim the exemption. If your car engine is less than or equals to 1600 cc, then your exemption amount is equivalent to rupees 1800 per month. Secondly, if your car engine is more than 1600 cc, then the exemption amount is 2400 per month. Also, if you opt for a driver, then extra exemption that you can claim is 900 rupees per month. Also, if you have any telephone bills, that you can submit the bill to the employer and claim the deduction on that particular amount. Also, you can claim the children allowance up to rupees 100 per month per child, and it is limited to the maximum 2 children. Now let's talk about the savings contribution part. Under this you have an employee provident fund. What happens? The employer contributes at 12% of your salary in a provident fund, and this provident fund is used for your retirement, and you also contribute an amount equivalent to rupees 12% in your provident fund. So overall 24% of your basic salary goes into the contribution of your provident fund. Second, when we talk about the gratuity, a person is eligible for gratuity when he has completed minimum of 5 years in a one organization. Also, the amount of gratuity can be availed before 5 years at the employee's death, or if he is disabled due to the accidents. Now we are going to move ahead with the worst component, that is taxation. Yes, whenever you receive salary, the companies usually deduct a tax amount and submit it to the government. Now I'm going to talk about this tax when I'm going to talk about the salary slip. So let's move to the salary slip. So whenever you see your salary slip, you will see 2 sections. That's first part is your income and the second part is deduction. Under income section, you receive all the components in your pocket. But when I talk about the deduction, under deduction, there is a savings component that includes, you can say, a provident fund. A provident fund that I already talked about, it is used for the retirement purpose. Secondly, we have our professional tax. Professional tax is not mandatory in each and every state, but few states make it mandatory, and the company has to deduct an amount equivalent to rupees 200 under a professional tax. And then comes your TDS, tax deducted at source. So whatever your salary is, in whichever tax slab you fit, you have to pay a tax. And I already said that company submits the tax on behalf of you. So that's what the salary slip is. And if you have any questions related to the salary structure, you can drop a comment because it is quite complicated. And if you want to have a discussion related to money, then we have a Facebook group. You can also join that group. Also, if you don't want to miss any videos related to personal finance, then don't forget to subscribe the channel. Hit the bell icon button, and if you like this video, then you can like the video and you can share your reviews and suggestions in a comment box. Till then, bye bye, take care, and thank you so much.